Since November 2021, October 2021, November 2021, the world's entered a different phase. It was as if we were gliding, and we've entered a phase of turbulence. And there've been lots of developments since then, right? You had the Federal Reserve in the US, changing stance, or at least indicating they're going to change the stance. There was a little bit of the Omicron variant that started to come up in October, November sometime. So there was a whole bunch of negatives, if you will, that came up. And here we are today, 5, 6, 7 months hence, and suddenly a lot of things look extremely gloomy. One of the things that I've noticed when I'm meeting people and talking to people is that they're all talking terms, and I'm not sure whether they understand truly the context in which they should be reviewing the data or the view and taking decisions. So my first and only point of call was Vivek, so that I could get him on the podcast and talk to you and explain some of these things. So over the course of the next 1 hour, we're going to try, Vivek is going to try and explain to you various things which I'm going to put to him. And we'll do it in a way that is extremely easy to understand and hopefully actionable. So this is a little bit of a detour from a typical investor hour. So with that little bit of a background, Vivek, let's jump straight into this, right? I want you to start by telling us what's happening when it comes to inflation. So if you can start literally by what is inflation and what are the misconceptions, what are the conceptions, and in layman's term, how should people read it from a global perspective if you want and from an Indian perspective?
Okay. So inflation is the rate of price rise. So let's say if something costs $100 as of today, and if 1 year down the line it's 110 rupees, so then the rate of inflation is 10%.
Yep.
The inflation that keeps getting referred to in the media and by fund managers and analysts is basically the retail inflation, which the governments of countries calculate, and then there is the wholesale price inflation as well, which also some agency of the government calculates. So that is what inflation is at a very basic level. Now, what has happened in the last few 6-7 months is the fact that inflation in the rich countries of the world. Now, rich countries, by that I mean the US, Canada, a lot of countries in the Euro area, and the United Kingdom, and Australia, New Zealand also, and Japan as well. Now, inflation in these countries, except possibly for Japan, in many of these countries is at a multi-decade high level. In the US, the inflation in April was at more than 4-decade high. In the UK, it was at a 3-decade high. In the Euro area, it was at a 2.5-decade high. Now, the Euro area, the interesting thing is the inflation numbers are available only starting from January 1997, because that's the point at which Euro sort of started to become a reality. So it's the highest in the Euro area ever. Now, obviously, what happened was that people who run these central banks thought that this inflation would be transitory, like our governor, Mr. Shaktikanta Das as well. I mean, Mr. Das called inflation transitory for the first time, I think, in December 2019. We are now in May 2022. Inflation has been anything but transitory. The change, I think, towards the outlook towards inflation happened at the point of time when Jerome Powell's second term was made official. So I think the negotiations, I mean, I have no proof for this, but the negotiations that would have happened with the government, given that Powell is a Republican appointee, and we currently have a Democratic administration. I think during the negotiations, it was probably made clear to him that, all this transitory stuff is now gone a little overboard.
If you want to keep your chair.
So let's now, let's start talking that the inflation is here and inflation is here to stay. Now, why does inflation happen? Okay. There is, if you talk to economists, they'll talk about it in a way where they would say that there is the supply side inflation and there is the demand side inflation. The supply side inflation is when, the production of various products falls, but the demand sort of remains. So there is a supply problem, and for the market to adjust, the prices have to go up. The demand side inflation happens when people have more money in their hands and they have greater purchasing power, and so they go out and buy stuff, and because of that, because the supply cannot go up as fast, so prices go up. Now, what happened in the last few years are, basically, I think there is a supply side driven inflation and there is demand side driven inflation as well. Both things have happened parallelly in the rich countries of the world. Now, so if you look at if you look at late 2019, early 2020, when COVID sort of started to spread, one of the reactions of the central banks of the rich world was that they started printing more money and pumping it into the financial system. Now, the idea was obviously to pump more money into the financial system and drive down interest rates. So that at lower interest rates, people would borrow and spend more, and corporates could also, borrow and spend more. So essentially, the idea was that the economy should not get into a recession or a depression.
It should not jam up. You need liquidity moving around.
So this essentially, if you look at it, this has been the way the central banks have been operating for a while now, and especially in the aftermath of the financial crisis of 2008, which broke out in around September 2008, when Lehman Brothers, the fourth largest investment bank on Wall Street, went bust. So that was the ready model that central banks of the rich world had in their heads, and which is what they did. Now, so when money printing happened in 2008, a lot of people, and I mean I was one among them, sort of shouted from the rooftops that now we'll have inflation. Because obviously we essentially followed the simplistic model of inflation where there is a lot of money which has been printed and pumped into the financial system, and that money is chasing the same amount of goods and services, and because of that prices go up and there is inflation. But that did not happen, and there was a reason for it. The reason for it was very simple. It was the fact that the money that was printed wasn't put out in the hands of people, right? So it was essentially used to drive down interest rates, and at the same time it was used to rescue a lot of big global financial institutions which were in trouble. This time around, the change was that while the central bank was printing money and pumping it into the financial system, the governments of the rich world were also spending a lot more money. Now, it wasn't like central banks were printing money and handing it directly to the government, but indirectly the process was like that, because how does a central bank print money and pump it into the financial system? It basically buys bonds, right? So when it buys bonds, it buys old bonds and it pays investors that money, and the investors can then use that money and buy fresh bonds. So it's essentially an indirect transaction, but it basically means the same thing. So the central banks of the rich world financed the governments of the rich world, and the governments of the rich world then transferred a lot of this money directly into the hands of people. So basically, debit cards loaded with money were issued. In some cases, cash, money was transferred directly into bank accounts, and so on. So this was one part. Okay.
So the money in the account, in effect, created demand from consumers.
That's one part. At the same time, what had happened was that the global supply chains broke down, right? So a lot of products which move across borders. I mean, it's not like, products, the intermediate goods also move across borders before they're finally assembled, right? So when this system broke down, so suddenly, people had money in their hands, but the products which would, probably come from a China or a Mexico or India or any other country, were not hitting the markets of the rich world. So there was a supply problem, and there was supply led inflation and demand led inflation. So both of these factors came together, and we had a decadal high inflation. Now, obviously, these central banks were clearly caught napping, because in their heads they were still in 2008. So that was the model they had. We printed money in 2008 and we didn't have inflation, so there would be no inflation this time around as well. So which is why, that there was this talk about inflation being transitory. So this is the basic, as basic as it.
I think that's a wonderful explanation of what has happened, what has transpired. And I'll just sort of try and restate it once more so that it sort of, you're all able to absorb it. There was two kinds of inflation. One was triggered because supply chains broke down, and therefore there were lesser goods available for you to purchase. On the other hand, governments were writing checks and giving it to people in their bank accounts. Go and spend the money, because they wanted the economy to move. And so same person with more money in the bank account means more demand. He's willing to buy more product. So here there's demands going up, supply is going down, and there you have a problem where which creates inflation, because for the same amount of goods with more money, you need to charge a higher price. And that's what inflation is, the rate of change of price. Now, we are today in a situation where if you ask any of our viewers, when they go to the market, when they go and buy vegetables, the prices are up, quite significantly up. I don't know whether they are across the board up, but I hear from time to time that they are up. So in fruits and vegetables, etc., there is not much of a supply chain effect, I would assume. I guess in things like wheat, etc., where there's a global market, there's more of a impact. So for our viewers, just trying to just tell us, when they are shopping for their week, for their month, and they are feeling the pressure, what's really happening?
Okay. So there are a lot of factors here. So we, there was globally, there was supply-led inflation and demand-led inflation, right? Now, these were two factors at work. Now, the third factor that has come in is the Russia's attack on Ukraine. Now, a lot of people don't realize that Russia is a big exporter of commodities, both agriculture and non-agriculture commodities. So Russia is the biggest exporter of wheat. Ukraine is the fifth largest exporter of wheat. Okay. Now, so in case of wheat, what happened was that India did not have a problem. We produce a lot of wheat on our own. The problem was that we were so busy in trying to tell the world that we have enough wheat to fulfill the global backlog, that we forgot that wholesale prices of wheat were growing in double digits from November on. Okay. So clearly, whoever was the government guy who was in charge of this was not looking. So, and this was happening because the private market was buying up wheat in the private traders were buying up wheat in the open market for exports. And this continued for almost 6 months till the government woke up and banned wheat. Wheat export, they didn't ban her. So that is one reason why wheat and atta prices have gone up. They have started coming down. I think in the next month and a half, we'll see lower prices of atta. That is for sure. Okay. That's one thing. The second thing is that Russia is also the biggest exporter of fertilizers in the world. And India is, I think, either the largest importer or the second largest importer. I'm not sure right now. So clearly, when fertilizer prices go up, at some level, even with the government subsidy and everything, food prices will continue to remain high. Okay? So that is the second factor. The third factor is, we import a lot of edible oils. Okay, so Russia is the largest exporter of sunflower oil in the world. Okay, and then we also import a lot of palm oil from Indonesia and Malaysia. So palm oil is used in a lot of FMCG products. So Indonesia had banned the export of palm oil, which I think now has been taken back. So that has been pushing up prices of edible oil products and a lot of FMCG products. I mean, I'm explaining this at a very, very broad, simple level. That leaves us with coal. Okay. Now, coal, I think Russia is the third largest exporter of coal in the world. And India has had, over the years, we have a very large geological reserve of coal. There is a lot of coal underground. Somebody needs to dig that up. And we are not digging up enough coal. I mean, this is like, I've been writing about it for 10 years now. And every few years, the same issue crops up. And the tragedy is that what happens is, if you look at, I'd written a piece recently, and I also realized it only while writing that piece when I looked at data. The production of Coal India is, the way it works is just superb. So what happens is that in the month of March, Coal India produces by far the lowest production coal during the entire year. Okay?
Just before the summer.
And then it starts. And in monsoons also, it's sort of subdued, because most, our mines now are not underground mines, but overground mines. But after that, it starts going up, and in March it peaks. Okay. So I just couldn't get my head around to why would a system, there is a system, right? So why would it produce and in some cases the production in April is, in some cases, in most cases over the last few years, the production in April was 50 to 60% of that in March. So I couldn't get my head around to why something like this would happen. So obviously there is a huge difference between what we consume and what we produce, which is met through imports. So there are dedicated power plants which use only imported coal. Now this year coal prices went through the roof. So a lot of these power plants shut down. And over and above that, because the price of coal went up, so I had looked at data from April to February. I haven't looked at March data. So while the import value of coal had doubled, the import volume had fallen by some 5-6%.
Wow.
So that is the dynamic.
That is the price more than double, a little more than doubled. Okay.
So once you take the shrinkage, volume shrinkage into account. So this has essentially led to a situation where many power plants, coal-fired power plants across India, and there are, I think, 173 power plants for which the data is available on a daily basis. Out of them, around 195 to 100 at any given point of time over the last few weeks, or maybe even 105 on some days, had a coal storage stock of coal which was in a critical situation. So which is why there are power cuts all across the country. Okay. Now what happens in case of coal and power is the fact that, when there is a wheat shortage, wheat prices go up. Okay. But when there is a coal shortage, electricity prices don't go up immediately. I mean, they go up with a certain lag, or so which is why there is not enough power being produced.
So I think one thing that will surprise everyone is that Russia is really a very big contributor to the global supply chain.
So, which is, what a lot of people don't realize is that, Russia is the largest country in the world, right?
Yeah.
But
by landmass.
But by population, they are some 11th or 10th or something like that, right? So obviously, they have, more resources than they can possibly consume.
Yeah.
So which is why they export a lot of
and
food and other commodities.
Yeah. So we, and somewhere in this mix is fuel. Because when the fuel prices go up, everything goes up. And
so fuel also, Russia is the second largest exporter in the world after Saudi Arabia.
Wow.
So that impacts prices everywhere.
Russia is a very big contributor.
And
in many senses,
and the fact that many of these commodities are traded on financial exchanges.
Mm-hmm.
So once that demand is also factored in, so that I think is the real
the speculative
demand essentially ends up, creating a lot of problems all across the world.
Yeah. So before we move to the next point, staying on inflation. So you mentioned that you think wheat is going to even out in time to come.
Yeah.
Are you seeing any other patterns which may give us hope or make us more cautious?
So I mean, so which is in the last, if you think, I think yesterday the government banned or rather limited the export of sugar to 100 lakh tons. In fact, I just checked sugar export data today morning. And in 2021-22, we exported a little over 100 lakh tons. That is the limit that has been set.
Right. Okay.
And I think cotton also something might happen sometime soon, because cotton exports have also gone up dramatically. So that is feeding into textile.
So it's like countries are rushing to safeguard their own resources.
So steel, I mean, the duty, export duty on steel is to ensure that steel is available domestically at a reasonable
we saw the ad in the paper, the full page ad from the association which makes the roads and the bridges, thanking the government.
Because it's price. So see, that's the thing, the thing with inflation is that it is linked in so many different ways that the human mind cannot possibly conceive everything in advance.
And the one thing that you mentioned right at the beginning is the rate of change. So I think this is what some people miss.
So basically what a lot of people don't realize in general conversation, it's like my grandfather used to always ask me, inflation is coming down, but prices are still going up. So I said, that's because inflation is the rate of change. So prices are going up at a slower rate. That does not mean prices are not going up. So that is the jargon for that is disinflation, where the prices are rising at a slower rate. So that many people don't seem to get.
And one thing which I want to make a note of that. Please don't extrapolate the same rate of inflation next year because the base is higher. So if prices went up from 100 to 110 this year, it's 10% inflation. But if next year they went from 110 to 120, it's less than 10%. So there's a base effect. So don't extrapolate that.
So on the base effect, let me give you a nice example. So the wholesale price inflation, has been growing at a rate of greater than 10% from April 2021. So many of these economists kept saying base effect, till the wholesale price inflation in April 2022 grew by 15%.
Wow.
Then there was no base effect because April 2021 it had grown by 10%.
Wow.
So see, these are, so you have to be very careful
how you do this. And it tells you the extent of if on a higher base, you get a higher increase, it's a double whammy. It's a big double
also,
whammy.
at times what happens is that, now let's say instead of 15% inflation, let's say WPI inflation in April had grown by 8%. Now, many people would have said that, inflation has come down, this, that, but ultimately the prices are almost 20% high in comparison to 2 years earlier. So, a lower rate of inflation on a higher base can lead to a very high price. So that also has to be kept in mind.
So I hope our viewers are understanding. I'm sorry if it's a little technical, but I hope you're able to absorb a lot of what we are discussing is very critical in your day-to-day lives. A manifestation, in some senses, of inflation is higher interest rates. The RBI governor the other day surprised everyone by calling an impromptu meeting and announcing a 40 basis points? 40 basis points is like 0.4% hike in rate of interest. And truth be told, I have an EMI and my home loan company sent an email the next day saying your rate of interest is going up. So talk to us a little bit about the impact that inflation is having on interest rates. How does that work? And how does that translate to individuals like the viewers and us.
So first things first, Rahul. The RBI has something known as a Monetary Policy Committee. So there are 6 members of the Monetary Policy Committee, and they decide on whether the interest rates have to be increased or decreased, or or they stay where they are. So the Monetary Policy Committee had met in April, early April, and they didn't do anything about the interest rates. And suddenly they woke up in early May to increase the interest rates by 40 basis points. Now, I mean, this is something I've been thinking about, and I don't have any answer for it. That I don't see, how the situation in May was any different from where it was in April, right? I can give the RBI the benefit of doubt on, Russia attacking Ukraine, changing things in the global scenario. But then Russia also, attacked Ukraine on February 24th, right? And April 4th was 40 days after February 24th. And early May, I think May 4th he raised rates. May 4th, May 6th, around. So that was almost 70 days later. So I don't know what they were doing in that, whatever points were valid on May, 4th or May 6th were also valid on February 24th. So clearly they were late in raising interest rates. Now, so typically, how interest rates sort of have an impact on inflation is the fact that when you have low interest rates.
First, explain us the other thing, how inflation manifests in interest rates, like how the interest rates start to go up because of inflation.
So which is what? So basically, I was basically saying that only. So when when inflation is on the higher side, right, you need to bring it down. Now, the only way RBI or any central bank can control inflation is by controlling consumer demand, right? And the only way to control consumer demand, or rather one way to control consumer demand, is to increase interest rates. Because, the conventional theory goes that at higher interest rates, people are likely to borrow less, and at lower interest rates, people are likely to borrow more. So that is why central banks, start raising interest rates when inflationary expectations are high. Okay. Now, you might argue in this case that a lot of this inflation is supply side driven, which is true. But you also need to take into account it's supply side driven, and which is why the RBI cannot do much to control inflation, which is a fair point. But what you also need to take into account is the fact that, and I mean, I haven't seen any central bank talk about this at all, and including the Indian central bank. And in the Indian case, and even in the Chinese case, a lot of savings are in the form of deposits. Okay, so the rate of interest on your deposit has an impact on consumption. Okay, so if the rate of interest on your deposit, like for a very long period of time, this last year and this year, rate of interest on deposits was 5%, or even lower, in fact, 4.5 to 5%, and inflation was 6%, right? So, what are you doing basically? You are essentially, you are in a situation where the purchasing power in the hands of people is coming down. Now, a lot of people live off their income from their deposits. So, if that income stays the same and your rate of inflation goes up, so obviously the consumption will come down, right? And then there are people who are saving for the future using deposits. So if they have to if inflation is higher, so if they have to save the same amount in real terms, they need to save more in nominal terms, right? So once you take all these factors into account, when inflation is likely to go up, the central bank needs to start raising rates. The other thing that we haven't talked about and we need to talk about, what happened in the last 2 years was, and this is not just in India but all across the world, the rate of interest on government bonds, on government schemes, on fixed deposit, basically the fixed income investment part, was lower than the rate of inflation. Okay, and this pushed a lot of money into stocks, cryptos, and real estate. Not in India. Real estate was not in India, not in the Indian case, but all across the world. Now, what did that do? I mean, we have seen in the last few weeks. I mean, people who essentially, all the crypto bros who would sort of
I like the term, crypto bros.
They are called crypto bros. Okay. Huh? Who would, every time I said, don't forget your fixed deposits, they would come back saying, have fun, stay poor.
Yeah.
So, now we know who's poor. So, because, as the old cliche goes, return of capital is more important than return on capital. So, because of, and this is all linked to your interest rates being lower to the rate of inflation. So, there has been a lot of wealth destruction, which could have possibly been avoided. Yeah. The second point here is that, real estate now, across a lot of large cities across the rich world is at such high levels that the younger, the millennial crowd, the Zoomers, they are not in a position to buy homes. I mean, be it New Zealand, be it Australia, United Kingdom, US, the bigger cities, not the not the Midwest or the Rust, the Rust Belt. So that has, that essentially feeds into inequality. And this is all in a way linked to the fact that the central banks look at monetary policy in a very insular, very limited sort of way. So this is how the entire thing comes together.
Yeah. So now that interest rates are going up, see, I know you had done this. I remember reading a piece that if interest rates have gone up, let's say by 0.4% or 0.5, the impact,
I'll give you that example.
Impact on the EMI is like...
Yeah, so this is like, this is an example I give everywhere and a lot of people are surprised. So, let's say you want to buy a car and you take a car loan of, you want to buy a small car, not one of these expensive gas guzzlers. So, you want to buy a small car and you take a loan of 5 lakhs or 6 lakhs or whatever to be repaid over a period of 4 to 5 years. At an interest rate of 10%. If that interest rate gets lowered to 9%, the EMI falls by 100 rupees. I mean, you can do the math.
Yeah.
I'm not being exact here, but so now, I am not sure who is going to go buy a car because the EMI is 100 rupees lower. So, so all this, link that people talk about, with so much confidence that now, because interest rates are going down, consumption will pick up. And I mean, I find that quite, honestly, very, very specious. And people essentially take on, buy a car or a two-wheeler when they are sure that they are in a position to repay the EMI. They are sure of their economic future. In fact, you can do the same math with home loan EMIs also. The difference would be probably 3,000 bucks or 4,000 bucks or something like that. Now, I'm not sure that, it may impact some people, but if you're buying a house of 70, 75 lakhs or, anywhere from 50 to a crore, which is what the range would be in any big city in India, तो 2,500-3,000 रुपए की EMI में क्या फर्क? What difference will it make, right? You would more, you want to be sure about the fact that if the EMI is 35,000 bucks, you are in a position to pay that 35,000 bucks, and you should also be sure of the, and if that EMI were to go up by, let's say, 2,000 to 3,000 rupees, you should be in a position to pay that EMI. So I mean, I think this entire link tends to be overstated. And I mean, I'll give you another example here. If you look at two-wheeler sales, two-wheeler sales in 2021-22 in India were just a little more than two-wheeler sales in India in 2011-12. So we are at now, where we were 1 decade back. And this is, and two-wheeler sales in 21-22 were lower than 2021. When in the month of April, not one two-wheeler was sold all across India. And in the month of May also, there were limited sales because there was a lockdown on. But interest rates are lower in 2021-22. So tell me, or look at real estate. I mean, when interest rates were higher a few years back, more homes were sold than
Yeah.
They were sold in the past couple of years.
Yeah.
So I find this entire, it's too convenient. It's just that it's a very easy explanation to.
Yeah, I think
offer.
is more like a is the word psychosomatic. It's like it's a psychological point
Yeah,
of
it's
view.
like,
more than,
it's just, it sounds good now that
Yeah.
it does make an impact on the, the corporate P&L.
Yeah.
That is one part of it. But, extending it to the retail side, I mean, I find that linkage quite spicuous, to be honest.
So there's inflation. It's causing all kinds of problems, but there may be a way forward which is less painful. Some things are kind of easing off. Interest rates have started to go up. I don't know what's your call on how much they'll go up, but probably the trend is they'll go up for at least a few quarters, if not less or more. How does this play out in terms of the economic prospects of India? Because that is our jobs, our compensation, our businesses. How do you see that playing out?
So that is, I think, a broader topic which has some linkage to interest rates, but not much. I think that on that front, we have not been doing well for a while now, simply because we haven't been creating enough jobs. In fact, there was this Status of India Inequality report. I hope I'm getting the name right, which was released by Dr. Vivek Kaul recently, who is on the Prime Minister's Economic Advisory Council. And I'm not quoting CMI data here. Because people get irritated with that. So that report said that if you make 25,000 rupees a month, which is 3 lakh rupees a year, you're likely to be in the top 10% of India's people who are in the top 10% income.
I buy that, yeah.
That's 3 lakh rupees a year. Okay.
Yeah.
So what does that tell you? That tells you that, and then, there was this National Family Health Survey. That data was also released some time back. And as per that data, women in the age group of 15 to 49, only 1 in 4 women work. Work as in all of them work, but work to get paid. They have a paid job. So, if you look at the history of what, let me just go a little off here and first talk about the India growth story. Okay, and then I'll connect everything.
Sure. Yeah.
So, what is the India growth story? The India growth story is that there are a lot of Indians, and we will sell a lot of stuff to a lot of Indians, right?
I agree.
So, there's this gentleman called Dr. Pankaj Ghemawat, who I had the pleasure of talking to around more than 10 years back. And he gave me a very interesting analogy, which I call the Campbell's soup fallacy. Campbell's soup is one of the bigger companies, consumer good soup company in the US. Now, Campbell's soup went to China. Okay. Now, China has a very well-developed soup drinking culture, unlike us, unlike Indians, where we have soup when we are ill. Right? Whereas China has, soup is a part of their daily meal. So, the Campbell's soup strategy in China, as per Mr. Ghemawat, was that there are a lot of Chinese and we'll sell them soup. Right? That's not the way it works. So, a similar thing has happened with the India growth story. Okay. Where we have been told that there are 140 crore Indians, so we'll sell them a lot of stuff. And a lot of people have fallen for it. Take Netflix, excellent example.
Yeah, I agree.
Their projections of higher numbers were based on doing more numbers in India. But I had written a piece recently wherein in which I explained, and this was even after they had cut their prices. So even at, 149 or 199 bucks a month, it works out to close to 149, it works out to 1800 rupees a year, which is not a small amount, because you are not the only thing that the guy is paying for.
That's right. Yeah.
Right. So a lot of these companies are now finding out that the so-called market is very, very
small.
limited. Recently, Nitin Kamath of Zerodha did an excellent thread on Twitter, and this is how the thread was. So as of March, there were 8.97 crore demat accounts. Okay, round it off to 9 crores. 140 crore Indians. So only 6% Indians have demat accounts, 6.4%.
Yeah, yeah.
So if we go to the percentage of the developed world, which is 25%, so there's a huge opportunity, right? But the point is, as he cited, there are less than 3 crore demat accounts which have an investment of more than 10,000 rupees. So what does that tell you? That tells you that most Indians don't make enough money to be investing in stocks. Most Indians do not make enough money to be buying stuff which all these startups want to
sell to us.
So that is a realization that is now set in over the last few weeks. But this was obvious from day one, right? So all this now, along with this, there is the demographic dividend, right? The so-called demographic dividend. What is demographic dividend? Demographic dividend is essentially a phase in the life of a nation where for a period of 3 to 4 decades, or even more than that, your working age population grows at a faster rate than the overall population. So, these guys essentially, have jobs, they end up making more money, and then they, consume and that creates more jobs. And that's how the virtuous process is supposed to work. And it has happened in, China, in the US, in UK, Canada, large parts of the world. So we assumed it will happen to us also. So one of the most essential points in the demographic dividend is that women have fewer kids because they get more educated. And then because they have more time, because they have fewer kids, they go out and work. If you look at, as I just pointed out, the National Family Health Survey, only 1 in 4 Indian women work in the age of 15 to 49. This is a very, very, high number. If you look at Center for Monitoring Indian Economy, it is 1 in 10. Okay. So unless this anomaly is corrected, we can keep talking about this is just startup is happening, that is happening. This is an anomaly that needs to be corrected, and it can only be corrected if more jobs are created. I mean, you can, a lot of people explain this away by saying that, you want your women, you want the women in family to work, and it's because the men are making more money, the women are not working. I mean, we can come up with all kinds of rubbish as explanation.
Yeah, but it is rubbish. You're right. It's rubbish because I think if you're talking of the demographic dividend, the typical go back to the land labor capital is the growth. The labor, if a family of 4, let's say a couple and 2 kids, if one person is earning everything and, and paying the bills, how much little is left to spend? On the other hand, if you have a double income family, then of course, what can rightly be argued is childcare. But I guess like the necessity is the mother of all creation. It will come up. It'll be available. If you're willing to pay a fair fee, there'll be people who take care of your kids and all that. Yeah, but you're right. I think you've hit on a very sensitive but very true point that for us to realize it, everyone has to participate in it in terms of contributing to building it. But we are really running the race with one hand tied to our back, where the women are still not entering
the workforce. So that has to be, that needs to be.
So that's, I think what you're telling us is something very, very fundamental, which you have to get right if you want to get growth right. How do you tie this in with all the data that is coming in these days, be it from World Bank, IMF, everyone, which talks of India really killing it when it comes to growth?
So here's the thing, recently the government put out data wherein they said that the tax collections this year in 2021-22 have grown by 34%, which is a huge number, even on a low base. When the economy was, the nominal rate of growth was supposed to be 19%. Okay. Now, this nominal projection was made before the war in Ukraine started. So, it will now probably grow at a lesser amount. So, basically, the economy will grow by around 15%, whereas the tax collections have grown by 34%. Okay. So, this is an anomaly. Okay, now the economists use a word called buoyancy. So the buoyancy of tax collection is essentially rate of tax collection growth divided by the rate of economic growth. So if 34% the economy has grown, tax collections have grown, and if the nominal GDP is supposed to grow by 19%, your buoyancy is 1.75, which means for every 1% economic growth, taxes grow by 1.75%. Okay. Which will now, given that the nominal growth will be lower than what it has been projected, the buoyancy will be around 2 in my estimate. Now, what does that tell you? It tells you that the tax collections are twice that of economic growth. I don't think this is a reason to be proud of. Obviously there are some points there, that the fact that GST collections have improved because their processes have improved, and because they're catching people who are not paying, all that, very, very good on that front. But ultimately what it tells you is that there is a certain section of the economy which is doing better than another section, right? So what has happened in the last few years is that the informal part of the economy is gradually being destroyed, and that part is being taken over by the formal economy, and that has also led to inflation. Okay. So when inflation goes up, and this is one more reason for inflation. Okay. So when inflation goes up, obviously your tax collections will also go up, right? So the major reason GST collections have gone up is because inflation. Your WPI inflation last year was close to 12 to 13%. Imported inflation, there is GST, on imports as well. So that is also very, very high. So basically, one section of the economy is doing well, and that growth is not being spread across. So which is why economic growth is going to be higher than many other countries, but it's not something which is being spread across.
So if I understood you right, some of the numbers that we are seeing, GST all-time high, taxes doing very well, the economic growth is going to be well, some of it is simply an impact of higher prices.
The tax part of it is an impact of higher prices.
So you may not necessarily be better off. It's just that price rise has been pushed through, and because the taxes are a function of the selling price, the collections are good.
So it's like this, right? I mean, as I said, I gave you the example of how commodities, while their import volume has fallen, their value has gone up.
Yeah.
So when the value has gone up, your GST collections will automatically go up.
Yeah.
So it's a very simple. So there is explanation. There is domestic inflation, there is imported inflation, and both of them are feeding into higher GST collections. So it's not. So which is why any analyst worth his salt should essentially normalize numbers before talking about it.
Yeah. What about okay, let me step back. Big picture. How does India look to you on a 3, 5, 10-year kind of
I think we will be. This is something I've said before also. We will grow by 5-6%. I don't think that would be a problem, because that is, the system is such that it will propel us forward.
So just for the benefit of the listeners and the viewers, when you say 5-6%, it's
real
after removing the effect of
inflation.
price hike,
The
actual growth that you will feel.
Yes.
Yeah.
So 5% growth, I think should be okay. But any talk of 7, 8, 9% growth should be taken with a pinch of salt. We might see 2021, 22 or even 22, 23, we might grow by a higher rate. But that is more because of all that we lost due to the pandemic.
Yeah.
So in fact, RBI had recently, they had done a calculation in which they said that the loss of economic growth due to COVID, we'll make up for it only by around 2034, or it's a very high number. In fact, even the economic survey, not the one this year, the one last year, they had said something like 2025, or this is the growth that we have foregone because of COVID. So that is also there. So I think it's not I don't see a basic problem with any 5-6% growth. I mean, like a lot these days, what happens is a lot of people basically end up asking me, is India the next Sri Lanka? Is India the next Pakistan? Which I think is a very, just because one country is doing badly doesn't mean that we are, we may not be, there is a lot of things that are not currently right with the Indian economy, but that doesn't mean that we are as bad as the Sri Lankan economy, or we are going that way, or. Yeah. So basically, the one thing in the Sri Lankan case was that they took on a lot of foreign debt, which they're now unable to repay. Whereas, we don't have
Chinese money. Don't take Chinese money.
No, we do take, but only in equity.
Only in equity, which you can blow up like what happened to Mr. Paytm Mall.
Yeah, we can. The guy, poor guy. I mean, Jack Ma got really rogered there. So
he got rogered in China also. He got rogered here also. So 5 to 6% growth. I remember.
And let me tell you one more thing. If you look at the history of economic growth, very few countries have grown at even greater than 5% for multiple decades. Okay, so you have probably this Taiwan, South Korea, Malaysia, China. Okay, and I think there's probably Hong Kong or Singapore, or one of these small countries. So very few countries, the history of economic growth, very few countries have actually, continuously grown at greater than 5%. So even 5% is not a bad.
So what you're saying is now 5 to 6% is not bad. It's large
5% is good if without in our current state, the state that we are in.
Yeah, and we can of course, and I guess when you talk of countries which try and aim for higher, and they're running on empty, like we had this whole Far East blow up in the 90s. They were all fueled by foreign debt, and they didn't have strong policies. And you don't want to blow up like that.
Yeah, but they had already grown quite a lot.
They had grown quite a lot.
It's not that they blew up before.
Even after the blow up, they're still better off than what they were. Anyways, I think India is fine with a more steady rate of growth, and
for sure.
I think. Okay, so we've spoken inflation, all technical stuff we've spoken. We've spoken about GDP, etc. Now let's spend some time talking about real estate.
Sure.
Now that's an area you spend a lot of time on. I believe you were amongst the first people to call the top of the property market and tell people that, boss, it's time to stop because things are not looking good. So take us back, 10 years I think it was, and explain to us, what did you see in the property market that made you call the top?
I think what happens is that I was an outsider, right? I was not invested in real estate, and I was not a part of the real estate industry in any way. And I was a freelancer, so it wasn't like I was working for a media house which was getting real estate
at all. No bias.
So it was very simple in the sense that, when you looked at, so it was basically my father's real estate purchase which got this entire thing into my head. So he bought this flat in, Delhi suburb of Dwarka for 25-26 lakhs, 2002, 2003 sometime.
20 years ago. So,
And by 2012, that property was going at some 2 crores. I thought it was crazy because, it's a place which is, it had nothing. There was no, life there. It just had a connection to the metro. That's it. The entire valuation was based on the fact that metro hai nahi, aayega nahi, metro tha. It didn't even have, direct water supply. The tankers would come.
Wow.
So I was like, this is absolutely crazy because this is not the kind of money that people make. And this was not even a posh area or anything, right? Or if you looked at all these, buildings that were being built across NCR and then all across the country, who had, Indians don't make this kind of money because if we did, we wouldn't be a poor country.
Yep.
Another example, a great example is central Mumbai, where I live, areas of Prabhadevi, Dadar, Lower Parel, Wadli, Mahim. There is a ghost city there, bang in the middle of the city. But it's just that it is not visible because, these are not small towers. These are towers which go, 40, 50, 60 floors. So if you walk around the evening, it's not as bad as it used to be now. Most of the flats were empty. And this was like, property 5 crores and 10 crores and, thousands of flats which have been built and are empty. So see, if you look at a city like Bangalore, where there is genuine real estate demand, where people want to buy
There's
a home,
employment generation and
and
people are coming in.
it happens. Whereas, in Mumbai, because everything is so expensive that, and Mumbai is no longer a city which actually attracts people to start a new business. Things are so, and that starts from the fact that real estate is expensive. So you would rather be in Pune or in Bengaluru or in Hyderabad or in any of these not so big cities. So the basic thing is, and that argument still stays. I mean, the prices are still out of whack with the kind of money that Indians make. So like I said, if you were to make 25,000 rupees a month, you would be in the top 10% of income earners in India. And at 25,000 rupees, the kind of EMI you would be able to pay would be probably 7,000 to 8,000 bucks a month. And you can imagine what kind of property you are not going to get anything for.
You probably get a loan of 10 lakh rupees.
What will you buy? So the demand, I mean, if anyone can crack this, the demand for Indian real estate would be at price points which are 20 lakhs, 25 lakhs.
Yeah.
That's the price point. So there is, as late Professor C.K. Prahlad said, there is fortune at the bottom of the pyramid. And I think a lot of people now and over the next couple of years will realize that. I mean, they may not be able to do anything about it, but they'll definitely realize.
So the trigger for you to call the top was the experience of property prices.
I was not very interested in real estate in any way, but the point is, when you go to Delhi, that's everything. Everyone talks about property, Mera property.
So I think the point you're making is so important because you don't really need to be a formal economist or analyst. If you just looked around the world around you, some things just don't make sense.
I mean, see, it's like, so the other thing that happened was that I knew how to calculate EMI on Excel.
Yeah.
So once you know that, it's all, you put in the numbers and you see that, it's a very, it's a very ballpark thing. Banks typically give you a loan amount, the total amount of the loan, home loan they give you is equivalent to around, on which you can pay an EMI, which is around 35 to 40% of the money you make. For higher levels, it can go up also. So let's say if you make, a lakh a month, so the EMI that they'll, arrive at will be around 30 to 35,000 rupees. So on that you can do the calculation. So even a lakh a month is not many Indians make that kind of money.
No, not at all. I remember reading in, I hope I don't get this wrong, in Rama Bijapurkar's book, probably 7-8 years ago, that 98% of Indians make less than $2 per person per day.
That must have improved a little now.
Yeah, and the calculation is the same. In a household of 4 to 6, it comes to like 20 to 30,000 rupees if you increase it a little by 20-25% over the last 10 years. It's like it's not like a mass middle class. It's like a mass lower middle class.
There's no middle class in India. No, that's the middle class is a term which is very loosely used and.
So that's real estate. Any view on real estate? You're still saying it's pricey. The real demand or the real.
I mean, so now
demand supply.
I have sort of revised my view a little in the sense that now I say that if someone really wants a house to live in, he or she should buy one, because there are other advantages of owning a house in the sense that if you have children, your children have a stable life. Your parents don't nag you. And then you don't have to change address proof every 2 years, 3 years. So all those advantages are there of owning a house. But one shouldn't. I think investment still doesn't make sense. And now the
buy it for use.
And the tax benefit is also all gone now. So it's not like.
So one of the reasons I think in the pandemic demand shot up is because in places like Maharashtra, they reduced the stamp duty by 3%. And the number of people buying the apartment went up by like 300%.
No, but that was also, there was another thing happening there. A lot of people who hadn't paid stamp duty were paying stamp duty.
Yeah. And which was like a big saving for many people.
It was not just people buying homes during that period. So.
Yeah, that's an interesting point. Okay. To your other favorite topic, cryptos. Have you become any wiser on cryptos?
No, I mean, what do you say? I mean, now we have... See, the one thing, the crypto story which was sold was that it was very simple. Central banks are printing a lot of money and, there's only so many Bitcoin that can be created, right? What they did not tell you is that while there is an overall limit of 21 million Bitcoins. Anyone can start a crypto, right? So there's no limit on the number of cryptos, right? So I found that quite funny because once I started following that market, this was the first thought that came into my head. The second thing they didn't tell you was that, the governments up until now have the right to create money out of thin air, and why would they, pass it on to anyone else?
Group of private individuals.
Which is why, look at what has happened in India. And the RBI is still not, they're still going bang, bang, bang. Recently they talked about the fact that there is danger of dollarization, which basically means that, if people start losing confidence in the rupee, it will become easier for them to move money out of India. So this is something that governments all across the world fear, which is why China went after all the crypto.
So my understanding on cryptos is that one of the reasons the government, I won't say use the word panic, but jumped into action was because, visualize this. You go to an exchange in India, you buy cryptos. When you buy the crypto, you can transfer it to any wallet.
Yeah.
You can transfer it to, what's that wallet which is very popular? Exodus. It comes as a first search result. So that's why I'm quoting it. And you can transfer it to Exodus.
Move money out.
And someone in the US can transfer. So you're effectively taking money out of the country without following the legitimate rules.
So which is why...
And they said Hawala is started again and everything is started again indirectly.
So that is, one thing which went against crypto big time and, which all these crypto bros did not... And also I think that the nail on they drove the final nail into their own coffin by advertising the way they did. That was really sad. Until then it was this quiet thing which was happening. By advertising, they shot themselves in the foot because now the governments could see what was happening. And I found it, some of their advertising was outrightly misleading, including stuff like crypto FD. I mean, the word FD has a certain meaning in the minds of people.
That's right.
In fact, I have a problem with even, cryptos being called currency. We should just call them cryptos. Because currency has a certain meaning in the minds of people. So it is, this is like, insurance being sold as investment. It is a worse thing than that, in fact. Rather, investment being sold as insurance. Sorry, not
having heard what you said, so we know that you're not a crypto investor. Yeah, I did buy some crypto, a Bitcoin 0.00030 zeros and something just to do a test.
I mean, I downloaded one app one day.
Yeah,
but the process of registering, I just got.
Well, I'm in a fix.
Bored.
So I bought those 000 something cryptos. I had used a wallet to transfer money because my bank is not connected to the exchange. And now the wallet has been disabled. So
good for you.
Now my the cryptos are going to stay there. They can't come back to me. So whatever it's worth. Okay, so that's crypto. That's short and sweet. How, looking at gold, silver, anything, any views, any thoughts?
There is, I always have some investment in gold at any point of time.
Has anything surprised you or disappointed you in the way gold has reacted to this inflationary?
No, I mean, in the sense, see, gold has also fallen. But, if you compare it with the way cryptos have fallen or with stocks have fallen, it's nothing. So it's there. I mean, I don't, gold is not an investment I really keep looking at. So if we
use this relatively short period of time, last 6 months, gold is truly proven that it's a hedge.
Cryptos haven't. In fact, what was the story behind crypto? That when inflation comes, cryptos will protect you. Look at what kind of protection they've offered. It's fallen now. The price of Bitcoin is 40% of what it was at its peak. And people here say that, no, I bought at 3,000, very good for you. But the general janta started talking about Bitcoin only once it crossed 50,000 and all the ads in the IPL and the Olympics
when started to flood. Elon Musk bought at 35,000 also.
So this is the,
Okay. What is worrying you the most these days? What keeps you up at night, so to speak?
No, I mean, these things don't keep me up at night. So
Not about cryptos. Anything that worries you, what you're seeing in the world, the economy, the stock market.
My big worry right now is talking about the economy. See, one thing that has happened is that the central banks of the rich world have printed a lot of money, okay? And not just post COVID, but even before COVID. So, like, let me get a little technical here. The balance sheet of the Federal Reserve of US at the start of September 2008 was around $900 billion.
$900 billion. That's less than $1 trillion. Less than $1 trillion.
Then it started printing money and pumping it into the financial system. How did it do that? It was buying government bonds and it was buying mortgage-backed securities. Okay? So, money was printed, bonds were bought. So, when bonds were bought, obviously the asset size started to go up. In this first round, it peaked at around 4.5 trillion, somewhere I think in late 2014 or early 2015. I don't remember. After that, it started shrinking and it went down to around 3.7 trillion. Then it started going up again. And I think at the start of 2020, it was again at 4.5 trillion, or 4.5 trillion, or a little lower than that. I think it was 4.2 trillion or something like that. Okay. It rose to around 9 trillion in the last 2 years. And now, starting in June, they'll start, basically what they'll do is the balance sheet will start contracting. How will it contract? The bonds which they had bought, they will mature. So when a bond matures, the central bank gets the printed money back. And then earlier what they were doing is when they got that money back, they would buy bonds again. So now they'll not buy bonds again. So the balance sheet size will start shrinking. A similar thing will happen in the UK and even in the European Union and European Central Bank over a period of time. The Bank of Japan hasn't talked about this as of now. So what will happen is that the money in the system will start coming down and interest rates will go up. Now, if you look at the history of the US over the last 4 decades, a lot of so-called economic development has happened by pushing real estate to lower levels, pushing interest rates to lower level, and encouraging people to borrow and spend. Because the conventional economic growth which was led by manufacturing is not happening. Now, what happens is so between June and May next year, the US Fed is supposed to be taking out close to $1 trillion out of the financial system. So the question is, when will they stop? And will they sort of reverse this thing if we get into a slightly recessionary environment or the economic growth slows down? Because if you look at the history over the last 4 decades, not 4 decades, 3.5 decades, since basically when Alan Greenspan became the Fed Reserve chairman in 1988, at any sign of economic trouble, Fed has cut interest rates. So if the Fed cuts interest rates all over again, then we'll see these bubbles again all over again. So it's a very tricky scenario to be in, which is why I at the risk of sounding very, very cliched, asset allocation is very, very important. It is, in fact, I think, what happens is a lot of us get caught in all the noise around investing. Whereas this is the most simple point which needs to be followed. Have money spread across different asset classes. In what proportions? That is something that you need to be able to figure out, because all of us have a certain amount of capability to take on a certain amount of risk. Your risk-taking ability is much different from mine. Or from the guy who's recording us here. So that is something I think a lot of people don't think about investing in these terms. They are just like, acha kya chal raha hai, what is going up, abhi ghar le le, abhi gold le le. And the media also feeds into this. A lot of investment experts feed into this. So you have to basically be, at any, if you look at the last 2 years, a lot of what has happened is that a lot of so-called experts have propped up from the social media. So if you look at young guys, a lot of them are in their 20s or in their early 30s, and and they have huge followings. And some of them, they say stuff like FDs are useless. Why are FDs useless? Because FD rate is 5%, inflation is 7%. So I think, you have to, obviously when you do FDs at this point of time, you will, in one way, you are losing money on it. Yes, that is a no-brainer. One understands that. But your capital is protected. No? It's not like you have all your money in Bitcoin and now suddenly 1 lakh is down to 40,000.
Yeah. The social media guys don't understand the concept of return of capital is more important than the return on capital.
So this is, I find it amazing. And you have these, 19, 20-year-olds trying to give you gyan. So here, see, the thing is, you have to be, people who haven't seen a bear market, it is very difficult for them to imagine a bear market.
Yeah.
Now, a normal guy, who has a family to feed and there are 20 things on his head, can't possibly follow everything. So, which is why it is very, very important to follow asset allocation. If you want to do stocks, few good stocks, do a mutual fund. If you don't have the time to figure out a mutual fund, do an index fund.
Yep.
Right? Buy some gold, have some money in FDs, buy a term insurance policy, have health insurance, and if you have money, buy real estate. Yeah. In fact, investing in at its very basic level is very, very simple. It's just that we have our need for excitement makes it complicated.
Yeah. Cocktail party talk.
Yeah, and cocktail party talk is one part of it, and the fact that you get the adrenaline just goes.
Yeah.
And what has happened in the last 2 years is the fact that because prices have gone up, and they have gone up because they have gone up, right?
Right.
So a lot of people have taken that as their personal expertise,
that's the most dangerous, right?
Yeah, which is very, so that is, it will take time for something like that to unravel. In fact, there was this video going around recently, and I think I should talk about it. So one of these young chaps had this sort of a sheet open, and as usual, like a lot of these social media gurus talked very, very confidently. So he said, India में तो सब लोगों का 15 से 20 लाख रुपए का घर होता है, तो वो आप बेच दीजिए और उसको आप अच्छे स्टॉक्स, क्वालिटी स्टॉक्स में लगाइए. क्वालिटी स्टॉक्स में आपको 26% रिटर्न साल का मिलेगा.
क्रिमिनल.
और आपके पास 20 साल के बाद 15 करोड़ या कुछ, he came up with some big number. I said, अच्छा. So 26% return. So normally if you look at so this was an outright fraud. So there is a simpler version of this fraud, wherein you have fund managers talking about the fact that between 1979 and 2022 or whatever, Sensex has given 17% return per year or whatever, 16%, which it has. But the point is, a bulk of this return was before 1992. This no one talks about. So if you calculate from 1992, if you calculate from 1992, the return comes down to some 13%. Yeah. Or if you look at the Nifty TRI, Total Return Index, which is, I think, the index one should look at because it takes even dividends into account. So they have data starting from 30th June 1999, if I remember correctly. So the return of that index as of a few days back when I had calculated it was 13.6%, 13.5% per year. And at peak Nifty TRI, it was some 14 point something. So 26% per year nahi hota hai.
No.
So you have to be, you have to be realistic about.
Just to clarify, 26% you would beat Buffett hands down.
No, you would beat anyone and everyone. Yeah, why just Buffett? You would be. So as the guy said, and then he went on to say, कि अगर आपका घर 1.5 crore का है, 1.5 crores, you will end up with 150 crores after 20 years. I mean, if it was as simple as that, we would all be,
we'd all be
millionaires and billionaires.
Okay, so your biggest concern is how this withdrawal of all this surplus money plays out.
What will happen then?
What will happen?
Because see, here's the thing. If they reverse, then obviously then all these bubbles will start popping up all over again. The market will go up, crypto will go up. All these, VCs will be back.
And I think that's the bull case, right? I've been tracking this relatively closely. That the US has had 1 quarter of negative growth, assuming the numbers are not revised, and 1 more quarter is negative. Then you have a recession. And the Fed may just pull back a bit, and suddenly you could have.
So also, what has happened is that in 2020, the governments have seen that when you put money, the governments have seen and the citizens have seen that the governments are in a position to put money directly in their hands. So there is a huge moral hazard at play here. So how do you, which is the thing, which is why the entire forecasting business as of now is essentially useless. Because you really don't know how this is going to play out. And as an individual, the only way to play this is asset allocation, where you have some money, whatever, which is, if at its most basic level, if you do not want to use your brain at all, just to spread it across equally.
In fact, both of us know, Dr. Mark Faber.
Yeah, he does that.
Once told me, all you need to do is 25, 25, 25, 25. 25 in property, 25 in stocks, 25 in bullion, and 25% in cash. And he said in his experience, and I think he's probably got a 40-year track record or whatever, he said it works the best. So I think that's the key message. Really get your allocation right. We are still in the world of turbulence. We don't know how it's going to pan out. Vivek has explained all the challenges and opportunities we're dealing with. But the only solution, if you will, for you, is to be sure you are allocating well. Forget the cocktail party talk, etc., etc. Just focus on your allocation and get that right. So I want to conclude with a question which I think only you can answer. If you were to bump into Nirmala Sitharaman, what's the one question you'll ask her? Or what's the one piece of advice you'll give her? Could be either.
I think what I would basically tell her is that we really need to, one, sort out our GST. Two, we need to have an environment where the smaller firms are allowed to become bigger.